Today we have a special guest, Stephanie Tomlin from Integrity Home Mortgages. Welcome. How's everybody doing?
Good. We're here. We're ready.
That's right. So today we are actually going to talk about rates.
Oh.
We have seen in the last 2 years that rates have taken a major jump.
Yes.
How is that affecting everything?
Well, I think it's causing a panic, honestly, and I think it's a panic that we don't really need. Rates are going to shift. They've always shifted.
Right.
They've just shifted in a speed that we have not seen in a very, very, very long time. So I think it's just caused a little bit of a rift in the market, and it's going to settle down. So I think everybody just needs to take a breath, calm down, deep breaths, get those squeegee balls and get out. But I don't think it's enough to not buy.
Okay.
It's never a reason not to buy a home at this time. I don't care if it gets to 10%.
It was once at 18%. So, I mean, and people still bought and sold houses.
Right.
I used to put 3 mortgages on one house.
Wow.
For real?
How does that work?
Yeah, why would you do that?
Yeah.
You can attach 3. You used to be able to attach 3 mortgages, 3 liens on one property.
To take money out for something?
So every time people would go and replace windows, it would be a lien attached to the property.
Oh, I got it.
Yeah.
Yeah, instead of coming up with the cash.
Yeah.
Not smart.
No,
Right.
they were leveraged to the hilt. That's where everybody was upside down.
That's the foreclosures.
Well, we used to be able to do 125% loan to value. So give them 25% over what the house was.
To go do something with it that may or may not improve the value of the house.
Yeah.
Wow.
So times have changed.
Times have changed.
So
where were the rates at 2 years ago as opposed to where they are now? How is that affecting?
So pre-COVID, rates were 4.5.
Okay.
Then COVID hit, yes, and then COVID hit, and they had to do something because everybody was not working. They had to do something to keep the economy going. So they reduced the rates. So the Federal Reserve basically almost 0% took the Federal Reserve rate down. So the bank's loan interest rates back were almost 0. So they could lower their interest rates, which then affected mortgage rates. So mortgage rates went to 2.5. I mean, actually, I did one at 2.25.
Wow.
A refi.
Whoever's got that, sit on that forever.
Oh yeah,
Don't ever change that.
Don't change that. And which is basically insane because no one can sustain that. The market can't sustain that. It's too low, and no one's making money. Really, the only people who made money in the last 2 years, honestly, a lot of it, the realtors and lenders who made a lot of it. Title companies, anybody who had their hands in real estate. But with COVID and everything, we've got the government doing forbearance on all these mortgage loans. Rent wasn't getting paid, so it went down the line, and landlords and banks, ended up holding a lot of liability that they didn't want to. So.
And then, how do rates affect the different types of loans you can get?
So.
Is there ever a point that you would want to switch them?
Well, I mean, I typically wouldn't take someone from a conventional and move them down to an FHA. However, FHA rates are running a little lower, USDA are running lower than conventional right now, but it depends on what you're doing. So if you're only going to be in a house for 3 to 5 years, conventional doesn't matter.
Okay.
It really doesn't matter. It's not that big of an issue. So we might go FHA. It just depends. It all depends. It's individualized. It's not cookie cutter, and that's the big thing. It's never cookie cutter.
Right. Renee, how from a realtor standpoint, how important is it to make sure that your clients understand everything that's going on with the rates? Because obviously, if they are panicking, what's your process in being able to educate them properly so they understand what's happening?
So the only ones you have to talk to about rates are the ones that are panicking. Because if you're not, because I don't know, like honestly, I don't know who's listening, but when I bought my house, I didn't know a thing about rate. Like I knew it was part of a conversation. I knew I just signed a document stating what my rate was, but I didn't know anything about. I didn't even know I could affect the rate. Like I didn't know
rate driven.
I was just excited about buying a home, and I was excited that the payment was what I could manage. So that's all I cared about. So I think that if I, now as an agent, if I have a client who's not having conversations about rate, I'm not going to start that conversation.
No, never.
I'm just going to, because it's not what drives them. Now the rate conscious buyers that we have had, those are the people that you have to have the heart to heart with. Like Stephanie can even tell us more, like, do you see rates going down? I mean, or
I see them leveling out, and what that means is not paying points. They may trickle down 1/4 point possibly, but they're not going back to 3. They're not going back to 4. Not anytime soon.
Okay.
Not anytime Well, two, we're on the verge of a recession right now, and that hasn't even been announced. And that's going to take 12 to 18 months to level out once they announce that we're in a recession.
Okay.
So all of this stuff takes time. So it's not going to be any
So
time
if they
soon.
announce there's a recession, how does that affect the market from a mortgage standpoint?
Well, it affects investing, it affects cryptocurrencies, and it affects how much money you throw into your 401k. It affects how much you take out of your 401k because you decided now you want to buy an investment property. You're going to rethink taking that cash out now because we're in a recession. So everybody's next move is going to be based on the announcement of this recession and where market is and what's going on. So people who are money conscious, I'll be honest with you, 80% of buyers are not rate conscious. They don't even know what the market's doing. They just want to know what their payment is. That's 80% of the market. And even some of these people who say they're rate conscious, it's only because of what they're reading on social media, on the news. They saw a commercial, they heard their friend talk, we got 3%. That's all, as far as that goes, that's all they know. They don't know anything beyond that. Well, why did they get 3%? Well, what happens? And yeah, but they paid $40,000 over for the house.
And now we're not going to be doing that anymore. So you're 40K over, you can actually buy your rate down to what they bought that house for.
Absolutely.
Yeah.
If you want 4%, $40,000 can get you.
And Joshua agreed. If you didn't know, we have a dog with us today as well. He agrees. He's like, that's right.
That's right. We just go with the flow right
40K buys you down to 4%. Cheers to that.
He's like, Mom, don't take my college fund.
Right.
I need
So
that education.
lately we've been hearing a lot about locking rates. Why is that important for a buyer?
Do not float a rate right now. Do not get fun and decide now's the time you want to be a gambler.
Now, you're
Now's
talking
not
to
the time.
lenders when you say don't float a rate, because the buyer is not the one floating.
Every once in a while, you have some risk takers as far as buyers saying, oh, I think the rates are going to go down in a week and kind of strong arm their lender. Well, their lender needs to tell them, look, I'm telling you right now, we're in a funky market. I would not float anything.
Right.
Lock when you can lock.
But now you have to pay for that, right? You have to pay to lock.
Right now, because the market has not settled down from yesterday's announcement from the Federal Reserve.
Okay.
Yeah.
And then can that be put in with your closing costs, or does that have to be paid at the time that you lock it?
It can be put into your closing costs, but closing costs all have to be paid at closing unless the seller's paying them. So those are all funds that have to come to close, and
Okay.
whether it's coming from the seller or coming from the buyer.
And just so you know, the seller's not coming out of their pockets.
No, it's
It'll
coming
be
out of the
proceeds
proceeds
of the house, unless of course there isn't enough of the proceeds.
Right, which most people wouldn't do that anyway.
No.
But yeah.
So yeah, the seller's never actually, that phrase is so archaic.
Yeah,
the seller's never paying the closing costs.
It's a seller credit, really. It's a seller credit they're giving towards that. Like you said, it comes out of their proceeds. They never see it. No one's going into their pocket, except for the buyer if they're the ones paying that off.
Right, coming into it.
Okay. And you hosted a lunch here just before we started
Just
this.
before this event.
So, which was great. And you were talking about heart rate. Can you explain that a little bit for those of us that don't understand what
So a
heart
par rate basically is costing you nothing for that rate. So for instance, let's say the par rate today is 6%, meaning it's not going to cost you anything to get that rate.
Okay.
But if you want 5.5, it's going to cost you some discount points. So let's say 5.5, it's going to cost you $2,600.
Okay.
So you can get 5.5, but it's going to cost you $2,600. So it's just going to be added onto your closing costs to get that 5.5. So right now, though, we're not seeing par rates at all.
Okay.
We're not seeing that. Everybody's paying discount points. I don't care if it's USDA, FHA, whatever it is. The only one that's really not that has par rates out there is VHDA, which is another whole gamut. But everybody's paying points right now because the market's just got to settle down. And it could take tomorrow, it could take Monday, next week. It just depends.
Like
It
if you're
won't be
not
like this
watching,
forever.
if they're not watching this today, the par rates have
Right.
probably expired. If you're seeing this weeks
Right.
from now, they
Right.
because they don't, or the points,
Discount points, yeah.
points would have expired. But it's just something. So why do they do that then? Explain to them, like, so because I know a lot of buyers would be like, a week ago I could have just got a loan and now I've got to pay. Why? Why are they paying?
Because the market has not settled. Market's in shock. So the market is in shock. So it's the investor. It's costing the investor more money for you to get that rate. It's costing them more money because the rates just got hiked up. So then they extend that cost to you. That's how it is. Right.
Got it. Okay.
Who are the investors? Banks?
Big banks, investors, private companies. Wells Fargo is one of the largest investors of mortgages, so they're a big heavy hitter.
They call some shots. Okay.
Yeah, there's all kinds of investors, tons of investors. Yeah.
Interesting. So if you're not cash heavy, what's going to be the best option for a first time home buyer?
Well, I think if you're not cash, you've got to get with a realtor that understands contracts and how to negotiate a contract in your best interest, who also has a relationship with a local lender that they can collaborate and come up with the best offer that's going to help you with you come in with less money to the table, if at all possible.
And there's ways too, like we've run into different situations. So for those who don't know, Stephanie's one of my go-to lenders, and so we've done deals. We've done deals where, you know, in the end they've had to come up with some money, and we've gotten creative with how to do that. Like they've been able to borrow from family or friends or something that like another source that they could pay back, you know.
Yeah, or a 401k, which is not a bad option because again, if you're putting it into a house, you're not getting that penalty. And I always say when it comes to a 401k, borrow from yourself, pay yourself back first with interest before you borrow from anybody else.
And that's what a 401k is doing, is borrowing from yourself.
Borrow from yourself and you pay yourself back pre-tax. So it's before taxes hit, so you're better off.
Yeah.
it
See,
helps
and if you need help with thinking outside the box, you need to contact Stephanie because she's definitely got some amazing ideas for that.
Yeah.
But yeah, like I wasn't cash heavy when I bought.
And it's a puzzle. Start rethinking. So if you've got a client that's adamant about putting 10 or 15% or even 20% down on a house, does it make sense when they're only going to be in the house 3 to 5 years? It makes absolutely no sense. Who cares about PMI? There's ways that you can pay PMI up front. That might be, for instance, you may think putting 20% down on $200,000 makes sense. A $200,000 house makes sense because you're not going to pay PMI. But what if your PMI is $26 a month? Does it make sense to put $40,000 down to save $24 a month? Doesn't make sense.
Keep that 40K.
Keep that money in, yes, for other things.
Yeah.
Pay off other debts, student loans, anything else out there. Put the pool in, whatever you got to do, or put it in your retirement.
Right.
Throw it into your 401k. Hide it under the mattress, whatever. But it's got to make sense. And honestly, to be honest with you, rate really makes sense if you're going to hold the mortgage for 30 years.
Truly live in that home, and most people aren't doing that anymore.
No, unless you're buying your dream home, then yes, let's try to get a rate that you want. Let's talk about buying the rate down to where you want it to be. Ooh, we're getting ready to get
Do you
hit.
hear that?
Yes.
If you hear that thunder,
some storms
that's
coming.
Yes, and so then that makes sense. Then you want to have a conversation about being strategic about rate. But honestly, if you're not going to be there forever and that's not your forever home, I don't think rate plays a huge role.
So you really shouldn't even be.
No.
That shouldn't be.
No, because as housing prices come down and rates go up, it's still a wash. It all evens
It's
out.
a balance.
Yeah.
It's like everyone just looks at one little piece of the puzzle.
Well, they get
tunnel vision.
Right.
Yeah.
Well, I'd love to ask Renee this in terms of real estate, so I'm going to ask you now. What are some of the biggest mistakes that you see from people that are buying?
Putting 20% down on a house.
She is not for that.
Not in this market.
Okay.
Even at 6% interest rates, it does not make sense. For here's what you have to think. For that $10,000 that I'm putting down on this house is only saving me $45 in a payment. That makes no sense. Do you know how much you can do with $10,000? A lot.
So you really should be putting a lot down.
No,
Like that
not
really
this.
should be the goal.
Put down
No.
the minimum.
Like,
The
but that-
Unless you
Yeah,
sold a
okay.
house and you possibly will have capital gains and you need to throw it in another property, then it makes sense. But again, it's not cookie cutter. It's very individualized. I would never put 20% down on a house right now.
Can you
Never.
explain capital gains really quick?
No.
I just had a
Oh, that's so
client
fun.
go through this. Well, really quick meaning, like if you own a home and you're gonna make money off that home, the government's gonna tax you on that because it's
As
considered
income.
Okay.
Right.
But if you turn around next, because I feel bad, I just
Put it
helped-
into another home.
I just helped Donna sell, and she was talking about capital gains.
Right.
But she didn't use a referral for the next agent, so she was on her own and just called me up and said, I bought a house. But could she have done, so
she could have shifted that money, those
Whatever she would've-
proceeds straight into, it could have never hit her bank account. She could have had the title company wire the check, make a check out to the next title company, and put it straight on that house, it would have never gone
And
into.
so then, in that instance, that's the one time where the amount you put down is almost irrelevant, because if you didn't put it to the house, you would be taxed. Is that correct?
Right, any money that you make from anything is gonna be, you looked at as income.
Okay.
Right, now there's a certain amount, if you've lived in the house for a long time, and obviously you've made money off of it, it's gonna be viewed a little bit different, because obviously the house has reassessed and has grown in value, so it makes sense to have made money off of it, right? But she will have to claim it as income, but she won't have to pay all the capital gains taxes. You gotta get with your CPA on that. I'm not.
She's
that
not an
clear on
accountant,
that.
but I've heard that in real estate.
Yeah, you always want to throw money into a house. That's why taking money out of your 401k does not make sense unless you're gonna use it for a property. Then it makes sense.
Because you're getting taxed on taking that out.
Right. Well, you're not getting penalized like you would with anything else because you're putting it in a home. And remember, your house is an asset, not a liability.
It's an asset. And that's what we've said too about rates. Like, no matter what a rate gets to, even if it's as mental as it was in the 80s at 18%, that's still 18% to somebody. The rest of it's yours.
Right. You pay 100% interest rate to a landlord.
100%.
Think about that for a second. There is not a chance that you're going to get $1 back.
Never.
The only thing you can ever get back is your security deposit, and let's be honest, half of them try to weasel their way of you getting that back anyway. So there's no chance of you getting $1 of any rent that you put in. Guess what? Every dollar you put into a house, you can get back out.
Yeah.
It's genius.
Even if it's 18%, you could still get that. You could get that interest back.
If you pay $1,500 in rent, that only gets you 30 days of living.
Correct.
That's it. I don't care what the lease says. It only gets you 30 days of living. If you don't pay your rent, you're gone. Yeah.
Well, with rates being the way that they are and the importance of the lender in this process, how important is it to have a local one versus a national one?
Oh, well, I think
That's
it's
a
all
fun
about
little,
relationships.
that's a fun little question.
I think it's all about relationships because online lenders, all they care about is rates. That's all they care about. And they are not individualized. They are straight cookie cutter. You just go in this box, USDA conventional, here's your rate, have a nice day. But they don't take the time to ask questions about how long are you going to live there? Do you have kids you've got to put in college? Does it make sense to put this money down? What's going on in the rest of your life to make sure this makes sense? So I don't think they really get to know their client on a personal basis. It's burn and turn. Now, don't get me wrong, lenders burn and turn locally, but we do it while we're getting to know you. We know how many kids you have. I mean, we know what's going on. Your kid's getting ready to go to college. You've got a wedding to pay for. Your daughter's getting married. Different things like that help us to put a package together that makes sense.
From an agent's perspective too, we prefer, I know if I'm a listing agent, I'm going to bring that because if you could see it's sunshine and then it's like,
oh, I knew it was going to be bad today.
Oh, it's like 100 degrees. So, okay, as an agent, if I'm listing a property and I'm looking at offers, I prefer to see a local lender because in the lending process, I've personally experienced where it's been an out of area, out of state lender, they don't pick up their phones, right? So now we're like, I need to know where the appraisal is, and I'm getting voicemail. We had this happen. The lender was an hour north in Charlottesville, and we were literally coming to close, and it was the 2 days before close, and the guy calls up and was like, yeah, we can't do this loan. Hadn't spoke, wouldn't answer phone, nothing before that. That's the one you had to save. So she had to come in at literally the 11th hour, start a brand new loan, and did it in 18 days, which is unheard of. But so here we are 3 weeks late, and of course, it's hard to not, like, everyone's like, oh, it's late because of her, even though she's, like, they forget she's coming in.
I got this handed to me.
Yeah, like, she's forgetting, like, everyone's got to yell at someone. That's the thing, though. If it's someone local, I can go find them and literally yell
at me in my office.
Like, I know where she lives. So, like, show her house.
She's not up there anymore.
I drive up, she's like, shh, what you mean?
I know, that's why we have the no trespassing.
In case I get confused. She told me I wasn't? What?
No, but it is. It's all about relationships, and this is a team effort. So if you got one team member that's way out there in yonder, wherever, and it's not answering the phone, they're not being part of the team, right? You can't put a baseball team together without the pitcher and the catcher. You got to have those two be. She's the pitcher, I'm the catcher. This is how this works. So.
And having that collaboration, lender, realtor,
processors, everybody
And you've said that that's really been a huge key to your success, is having that already built in.
We started with a bunch of different agents, and some that have been in not that much longer than me, or less than me. And you know, the difference between how I've scaled so quickly and maybe they haven't. Like when you look at like an agent's kind of landscape of what they do in their day-to-day job, one of the things that I did out the gate was team up with a lender who was going to make, you know, that I could trust, that I knew was going to learn as much about her job as I knew about mine, so that we were like maximizing our ability to inform our clients. And then in doing so, we maximize the chance of success, because the more that we know, the greater chance we have of getting this to close instead of it falling apart. And you know, so I think I have always said like 50% of my success is because I have a lender that I know if I give her a client, she's going to figure out the best thing for them, and we're going to close.
And we had to learn this. So she had to learn to trust me, and I already trust her, but she had to learn to trust me with her people so that she could go on and help another client that was waiting. So if she gets held up by micromanaging me and what I'm doing and she can't trust me, then she's missing out on potential other clients that she could be helping. Her job is to get the offer, get the offer presented, get the ratified contract sent to me, and then it's my turn to kind of take over. And she should sleep well at night knowing I've got it under control and I'm handling it. She shouldn't have to call me every day or twice a day or email and text saying, did you do this, did you do this, did you do that? Because number one, it's exhausting. No one has time for that, especially in the market we just came from. But it gets aggravating and exhausting for me to take those phone calls, because guess what? If I'm answering her phone calls, I can't be helping another realtor with their deal. So, you know, it's got to be a good, tight relationship and a trusting relationship and an honest relationship. If you know up in front that something's not going to work, you've got to be honest and tell someone this is not going to work. But she's known me for a while, and if I tell her it'll close, I can do this, she knows
it'll close. And the only 2 times it did it was because
they did.
The buyer, like we've discussed, like, do we have like addendums? We have the buyer sell, like, I will not spend $1 until, you know, like,
you can tell them, you can lead the horse to water, but you can't make them drink.
But they're like, oh, well, we're closing in 2 days, so I bought all this furniture, my new Schultz credit card, and it's like, there goes your house. Where are you gonna put all that furniture?
We've had a couple, two, and all this time that have basically self-annihilated themselves in the deal. So
and we kind of, and what I love about her is she will try to find a way to save it, but sometimes.
Oh, I will beat a dead horse.
She will. Like before she'll put that white flag up, it takes a lot. But I mean, sometimes it gets. I know that 1 or 2 times it's like there's. I mean, the whole thing.
I get to. Yeah, but I don't start there. You know, some people are negative Nancy's. I know I've done a lot of deals that realtors have given me saying, hey, I just went to 2 lenders, they said they couldn't do it, and then guess what? They come to me to fix it or save it or try to do it, and I do it. Are they easy? No, 9 times out of 10, they're very hard. They take a lot of time and a lot of figuring out all the ins and outs. But at the end of the day, it's still a loan that closed. And I still helped the family get a house. And guess what? I also helped a realtor make a sale that everybody told her she wasn't going to do.
No, and that's the magic of somebody who's like super hands-on and digging into a situation. That's what I loved about her, is that like I knew we worked with some of the hardest ones at first. Most of the stuff I said to her, we were with the challenging clients, and we still take them. Like if they show up and they're challenging, let's do it.
If they're willing to put the work in, I will. I can't do it for them, and I'll tell them I'm willing. I'm in this to win it. So if you want a house, this is what it's gonna take, and let's do it. Let's roll our sleeves up and get dirty.
Get dirty. Get dirty.
So bottom line is, don't worry about the rates. Find a lender that you can trust and work through the whole process, because it's the bigger picture that you need to be concerned about, not so much with the rates.
No, leave the
So
every season has its benefits. You know, the pandemic was so challenging, and what came out of it was beautiful as people got houses at great rates. But it took a minute before those houses at great rates were costing them in other ways. So now we're not fighting with multiple offers the same way we were, or fighting with, going over values. Overvaluing. You know, but instead you're not with this like beautiful rate. So like maybe you're not getting the $450,000 house, you're gonna get the $300,000 house that's equally beautiful. And then somewhere down the way you can upgrade, or it's just a shift. I've always said it's just shifting perspective.
Or that $350,000 house that you get now was that $400,000 house, but the prices came down to a reasonable
Right. And they
So it
will
might be the
shift
same
to-
house, yeah.
The point is, no one should see any of this as a reason to slow the process of improving their life with homeownership.
Just like people having children. I don't care how expensive kids are and college and gas prices, people still have it.
That's why they're not like,
That's right.
it's
Still
not
buy
like,
houses.
they're like, man, these guys gas prices, I can't take little one to Hockey Lake or like.
Yeah,
I
they
can't,
still
like,
figured out, and people are still going to Disney World, and people
Right,
still
so
doing
fast.
those
and
things.
we're still gonna do this, and we're gonna
It's
have a good
still
time
gonna go
doing it.
on.
Perfect.
Yes.
Well, Stephanie, thank you so much for
Thanks,
joining us
Renee.
today.
And my
Wonderful.
dog for joining
Awesome.
me.
Yay.
That's why I'm looking so awkward in this chair. Because he took half my seat.
All right, thanks everyone. We'll
Thank
see you next week.
Cheers.
Bye.